This is your teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve question which basically has come in A2 accounting. This is for A2 accounting, and the topic we are doing is non-profit organization. So A2 accounting non-profit organization is the topic, and this question, which is right in front of you, it has come in May-June 2432. May-June 2432. So what is the new thing in this question? There are two things which is basically uh, reminds you of the previous questions also, which is important. Number one, that in this question, which has come May, June 24, 32, May, June 24, 32, that closing inventory is not given in the question, number one. And you have to prepare cash account also to find total cash sales. Two things are important. Number one, we have discussed that thing in incomplete records also in AS, that when some expenses are paid in cash from cash sales, we have to prepare cash account to find total cash sales or any missing expense which could come on the credit side of cash account. Second thing, which is very, very usual nowadays in every topic, in every chapter, that the examiner wants us to go reverse. Go reverse means markup and margin is given in the question, and you have to go reverse to find the missing figure. Like in this question, May, June 24, 32, non-profit organization. A social club financial year ends on 31st December. It also runs a cafe. It means cafe trading account will be prepared. The markup of the cafe is 50%. So markup is given. When markup or margin is given in the question, we have to prepare. Number one, we have to find gross profit directly. And then we used to go reverse to find any missing figure, which in this question, if you see cafe inventory, assets are given, cafe inventory opening 31st December 2022, 11,200 and 23 is not given. Why? Because markup is given in the question. We will calculate gross profit directly, and then we will go reverse to find the missing figure of cafe inventory at the end. Number two, sir, why a cafe trading account will be prepared? We know that if opening and closing inventory is given in the question, we have to prepare cafe trading account. Number two, if opening or closing trade payables are given in the question, we have to prepare purchase ledger control account to find credit purchases. Subscription is given owing and prepaid of, and club expenses are also given accrued and prepaid. The summarized bank account is given. Cafe receipts is basically cafe sales. Total subscription received. Cafe suppliers means payment to supplier. Subscription refund. Any subscription has been refunded back to us. Club equipment which we have purchased. Cafe equipment we have purchased. So it means that we have two types of depreciation. Depreciation on club equipment, which will go to the club income and expenditure account, and depreciation on cafe equipment, which will go to the cafe trading account. Club expenses are given. All cafe sales are on a cash basis. All cafe sales are on a cash basis. The following information is also available. On 31st December, the cafe section of the club was broken into and some cash were stolen. So there was basically a cash stolen we need to find actually. After paying the cafe wages of 3,4,800 and cafe expenses of 15,500, the remaining cash was banked. So whatever is written over here, these are not cafe sales. This is known as cafe sales banked. Means the amount of total cafe sales, whatever the amount of total cafe sales are, out of those, some amount has been given to the submitted to the bank, and that is this cafe receipts banked. The cash register recorded the total cash sales for the year were 2,64,000. Total cash sales are given, which is 2,64,000, out of which we have deposited into the bank 2,12,000. 34,000 we have paid cafe wages, and 15,500 we have paid cafe expenses, and the remaining cash has been stolen, which we need to find. Subscription 2,400 owing at 31st December but irrecoverable. Subscription of 1,600 prepaid at 31st December were fully refunded because some members did not renew their membership. I think refunded 1,600 is the same over here, which we'll use in the subscription account. It is shown same as 1,600 in point number 3. Club equipment is depreciated at 15% using reducing balance method. Cafe equipment is depreciated at 20% using straight line method. A full year depreciation is provided in the year of purchase and none in the year of disposal. A coffee machine in the cafe purchased in 2020 for 3,000 was damaged. It is to be written off. This is a total scrap expense which we need to write, which is purchased in 2020 for 3,000. Now it is worthless. It is damaged. So we have to record it as an expense, and we also have to subtract it from the cafe equipment, because the cost of the cafe machine or cafe equipment should be decreased by 2,000, and it will be a dead loss, which should be written off in the cafe expenses also, with an amount of 3,000. Right. Next, trade in 2020 for 3,000 was damaged and is to be written off. So cost will definitely be written off, and whatever the depreciation on that particular asset, that will also be need to be written off. Okay. We'll discuss that later on. May, June 24, 32. State two difference between a receipt and payment account and an income and expenditure account. So receipt and payment account is basically prepared to find the closing balance of cash or bank. Income and expenditure account is prepared to find surplus or deficit. Receipt and payment account is based on cash basis of account. Income and expenditure account is based on accrual basis of account. Receipt and payment account includes all capital and revenue items. Means if we have sold machinery for cash, it will come on the receipt side. Receipt and payment account includes both capital and revenue items, whereas income and expenditure account will include only revenue items, means revenue expenditure, and revenue income, means expenses and income. Asset liabilities will not come. Next. So now what we have to prepare? Prepare the cafe statement of profit and loss showing the value of stolen cash in the expense section. So we need to find the cafe trading profit and also the stolen cash in the expense section, because cafe cash has been stolen. Prepare the club income and expenditure account for the year ended. So we will also prepare club income and expenditure account. And the committee members want to improve the security of the club. They have two options. Installing a security system at a cost of 120,000 followed by an annual maintenance fee of 1,000. We are recruiting a daytime security guard at an annual salary of 30,000. Advise the committee members which is the better option. Justify your answer. So let's solve the question. First, I'm going to prepare the cafe trading account, or you can say cafe receipt and payment, or cafe statement, cafe profit and loss statement. You can say like this. Damaged. So let's do it. 2020. The depreciation rate, I just want to see it again. Club equipment is 15%, and for cafe equipment, it is going to be 20%. Right? Okay. So now let's start. I'm going to prepare the cafe trading account, or you can say cafe statement of profit and loss. I'll go with the dollar sign here and here, and I will write here first cafe sales. Cafe sales are already given in the question. If you just look at the question, cafe sales are already given in the question. Where are the cafe sales? Let's find it out. Here it is. The cash register recorded books in the total cash sales for the year was 264,000. So we have cafe sales of 264,000. I will write here 264,000. Just give me 1 minute. Just give. So cafe sales is 2,64,000 and it is clearly given in the question 264,000. So now I will subtract less cost of sales, or you can say less cost of cafe. That is one and the same thing. It's up to you. You can go for any kind of statement. So I will go with the opening inventory. You can't go for abbreviation, but I will go for abbreviation because I want to save my time. So opening inventory at purchases less closing inventory. Let's see the cafe opening inventory. Opening inventory of cafe. Let's see, it is given in the question. Here it is. That is 11,200. So I will write 11,200 over here. Now I have to find purchases. In order to find purchases, I have to prepare PLCA. How come, sir? How do you able to know that we have to prepare PLCA? Because when opening and closing trade tables are given in the question, we know that we have to prepare PLCA to find total credit purchases, right? So I will write here brought down, which is trade payable at the start. I will write here carried down, trade payable at the end. And here I am going to write the payment to trade payable. And here comes the credit purchases. Credit purchases means that whatever purchases is basically of the amount. So cafe trade payables are 23,600 and 29,800 at the end. So 23,600 and 29,800 at the end. Payment to cafe suppliers. Let's see. This is the payment to cafe suppliers. This is the payment to cafe suppliers, not the cafe purchases. 172,000. So I will write here payment to cafe suppliers 172,000, and I can find the cafe purchases. Go for the total of the debit side, subtract the credit side. You can find the cafe purchases 172,000. You will also solve it with me so that I won't do anything wrong. That's why minus 23,600. So answer is 178,200. So the credit purchases are 178,200. I did the calculation right? Right. 178,200. Now I'm going to subtract Mux's closing inventory. I will subtract. Let's see. Oh my God. We don't have closing inventory. That's a big problem. We need to find the closing inventory, and we have been doing this since very long, because these type of questions used to come in O levels, these used to come in A levels, all the way through, where we have to go reverse to find any missing expense. And here it is closing inventory. We need to find the missing closing inventory because markup and margin is given in the question. So markup is given in the question. The markup of the cafe is 50%, right? So markup is always gross profit percentage on cost, but cost of sales is not given. So we have to convert markup into margin. What is the formula to convert markup into margin? Percentage over 100 plus percentage. Percentage over 100 plus percentage. So it will become 50 over 100 plus 50, 50 over 150. So I can calculate 264,000 multiplied by 50 divided by 150. So I will be able to get the answer now. So let's calculate it. 264,000 into 50 divided by 150. The answer is going to be 88,000. So 88,000 is going to be the gross profit. Now I will take the difference, sales minus gross profit. Sales is 2,64,000 minus 88,000. The cost of sales is 176,000. Yes, I did this by going reverse. This is a missing figure. This is the difference of the two amounts, like 264,000 minus 88,000. I will get 176,000. Now I can find the closing inventory easily. 11,200 plus 178,200, right? 11,200 plus 178,200 minus 176,000. So the closing inventory is 13,400. So I have found the missing figure of closing inventory, 13,400, which definitely is going to be subtracted from the cost of sales. That's fine. But by going reverse, I'm able to find the closing inventory. Now I'm supposed to subtract the cafe expenses, whatever is given in the question. Let's go back. First of all, in cafe expenses, if you just see the question, that subscription and club expenses, cafe expenses are given here, not given here. Is there any cafe expenses? Cafe supplies, club equipment, club expenses. I think here are they. So after paying the cafe wages and the cafe expenses, the remaining cash was banked. The cash register recorded that the total cash sales for the year was 264,000. So I can write the cafe wages and cafe expenses. Let's see if there are any opening or closing expenses given for any cafe wages or cafe expenses. No, there is no opening closing. It is for club. It is for subscription. We can write it directly and easily that cafe expenses wages are 34,800 and cafe expenses are 15,500. So let's write it down. Cafe wages is 34,800 and cafe expenses, I will write also here, that is going to be how much? 15,500. So I will write here 15,500. Then there is going to be depreciation on cafe equipment. I will write here also. Let me see. Now, we have seen that on 31st December, the cafe section of the club was broken into and some cash was stolen. So that cash stolen is also the expense of cafe, right? We have to write the cash stolen for expense of cafe, and for that we have to prepare cash account to find the cash stolen as an expense figure, because so we are back. So the cafe, if we talk about the depreciation on cafe equipment, we also have to write the cash stolen, which is an expense for the business. And one more thing, we have to write the cash stolen, and one more thing will be recorded. That will be the depreciation on cafe equipment, and one cafe machine has been written off. So you can write cafe machine written off. That will also be नेट तो पूरा आ रहा है, that is fine. फिर भी ये थोड़ा प्रॉब्लम कर okay. So let's prepare the cash account. I will prepare the cash account for you. When we need to prepare the cash account, if some expenses are paid in cash from cash sales, we need to prepare cash account to find total cash sales or any missing figure. So if you just see the question, total cash sales are given 264,000. So I can write here, these are the cash receipts, right? Or I can write here sales, that is 264,000, which I have written also in cash sales. Then on the credit side, we have paid cafe wages and we have also paid cafe expenses. So we have paid two things. Cafe wages we have paid, cafe expenses we have paid. Cafe wages are of 34,800 and cafe wages are of amount of 15,500. There is another thing. If you just look at the question, out of total cash sales of 64,000, we have deposited some amount in the bank with an amount of 212,000. The entry for this is, what will be the entry? Bank debit and cash credit. So bank account debit ho raha hai. Bank account is debited because of cash. So cash is supposed to be credited because of bank. It will come over here 212,000, and that is because of the bank. And then you can write cash stolen, which is the difference of the two sides. And this is the missing expense which we need to find, which will come on the credit side. So please help me out. 264,000 is the total, and you have to subtract the credit side to find the cash stolen, which has been, which is not there. So let me calculate 264,000 minus 34,800 minus 15,500 and minus 212,000. So this is 1,700. So we have found that the cash stolen is 1,700, and that will be written as expense over here, 1,700. Okay, now let's move forward. Any other cafe expense, that is the depreciation on cafe equipment. And we also have to see that one of the cafe equipment, coffee machine in the cafe, purchased in 2020 for $3,000 was damaged, and it is to be written off. Means it should not be written off in the accounts anymore. A coffee machine, right? The depreciation on depreciation on equipment, cafe equipment, is at the rate of 20% using straight line method. So let's see. If you see that we have purchased new cafe equipment, which is 4,500, and already we have a cafe equipment of 36,000. So let's calculate the loss, that what is the written off, whatever the amount is going to be written off. Okay, we need to write it in the cafe expenses, and we also need to subtract that amount from the cost of the asset, and we also need to subtract the amount of depreciation on that asset from the cost of that asset, because it is being disposed of or it has become zero. It is now needs to be written off. So first of all, let's calculate the cost. The cost is 36,000 of cafe equipment plus 4,500, which we have purchased new cafe equipment as a cost, minus 3,000, because 3,000 of cafe equipment has been lost because it is damaged, so it is of no use. So 36,000 plus 4,500 minus 3,000, that is 37,500. So now the cost of cafe equipment, current cost of cafe equipment is 37,500. Let's go for the calculation of the depreciation. The current year depreciation is, which is given at the start, is 26,000, right? Now, the asset which is sold, we will subtract the depreciation of that asset sold. It is purchased in 2020, right? And the depreciation is 20%. So 2020, it is depreciated. 3,000 is the cost at the rate of 20%. That is going to be 600. Again, it is going to be depreciated in 2021. 3,000 is the cost at the rate of 20%. That is going to be, again, because straight line method is used, 20%. Then in 2022 till 2023, it will not, again, it will depreciate it, obviously, because we have used that. We are currently solving the question for 2023. So 3,000 into 20% again, that will be again 600. So the total depreciation on the asset sold is 1,800. Then why we didn't charge depreciation in 2023? Because in the question it is said that when the asset is disposed of, we will not calculate depreciation, and we need to calculate depreciation for the whole year. So in that year, as it is damaged and should be written off, we will not calculate depreciation. So the depreciation will be subtracted. Okay. Okay, so we were doing 3,000, that is into 20% for 2020, 600, for 21, 600, and for 22, 600. So the total depreciation on the asset sold is going to be 1,800. So we can easily calculate that 36,000 is the cost plus 4,500 the new asset minus 3,000, which is written off. So the remaining asset is going to be now 37,500. Remember this 37,500 I don't need. Why that? Because this 37,500 will be shown in the balance sheet. Okay. Net is creating little problem, but no worries. We can do that. So we need to calculate the charge for the year, for the current year actually. Right? So remember, we need to calculate the current year depreciation on the cafe equipment. So for that particular reason, we know that the depreciation on cafe equipment is currently 26,000. It is already given. Now, in order to calculate depreciation, what we do, first of all, we will calculate depreciation on the newly purchased asset. That is 4,500 into 20%. This is the way, 4,500 into 20%. So let me calculate that. 4,500 into 0.2. The answer is going to be 900. Next step, calculate depreciation on the asset sold or which is damaged. We will not calculate it because it will be of no use, and straight line method it is discarded. Next, calculate depreciation on the existing assets. So what are the existing assets now? 36,000 was the asset in the past minus 3,000 which has been sold. The remaining assets are 33,000 into 20%. Because 3,000 will not depreciate. So the total depreciation, 33,000 into 0.2, that is 6,600. Okay, now 6,600 plus 900, it will become 7,500. So depreciation on cafe equipment is going to be 7,500, and I will write it over here, 7,500. Now I have to write the cafe equipment machine which is written off. So the amount of cafe machine is now 3,000 minus 1,800 because the cost is 3,000, but it is already been depreciated by 1,800. उस पर depreciation already 1,800 हो चुकी है. So the amount which needs to be, now the value of the asset is 1,200 and it is to be written off, it has become 0. So now I can write the expense, cafe machine written off, and here I will write that is 1,200. Now you can go for the total of the cafe expenses, and I will write the cafe profit to calculate. I know that it is not that easy, but only one part is difficult, and it is a lengthy question also. So 34,800 plus 15,500 plus 7,500 plus 1,700 plus 1,200. 60,700 is the total for the cafe expenses. You can also tally with me so that I may not find any difficulty, and I will get the cafe trading profit, or whatever you can say, the cafe profit. You can write it according to your choice. Okay, so the profit is 88,000 minus 60,700. So let me calculate 88,000 minus 60,700. So 27,300 is the cafe trading profit. I hope you have calculated that in order to get it correct. Now I'm going to go for the income and expenditure account because that is also required in the question. So let's prepare the income and expenditure account. I just need to rub it up. If there is any problem, Rafia, Upsit, you can ask me the question, Ahmed. Yes, this is A2. So you can ask me for any concept which makes you difficult to understand. But if you feel that the question is little technical, it is. But remember this, that all the points are basically related with AS. Number one, that we have been given markup and margin, and we have to go reverse to find the closing inventory by using markup margin. Then we have to prepare cash account to find total cash sales. No, to find cash sales are given. To find cash stolen, which will come on the credit side of the cash account. And remember that whenever cash account is prepared, cash bank will always be given in the question, right? And cash bank will come on the credit debit side of bank account and credit side of cash account. So we will write cafe trading profit here as income, and that is 27,300. And the other main source of income is, we all know that is subscription. So let me write subscription now. Or again, we have to prepare subscription account. Unfortunately, we have no other choice. And I already discussed with you, I'm telling you again, that in this particular October, November, I'm expecting the question of NPO in this October, November. So it can be a part of your paper, hopefully. Subscription account we prepared, accrued, brought down, accrued, carried down, arrears brought down, arrears carried down, in advance brought down, yeah, prepaid brought down, carried down. So owing is given. Start 4,800 at the start, 5,600 at the end. Let me see. 4,800 at the start and 5,600 at the end. Then in advance brought down or prepaid brought down, that is 4,000 and 3,200. I will write here 4,000 and 3,200. Then the bank figure. The bank figure is given. I will write the bank figure also, which is the subscription received during the year. I can write here total amount received. That is, let's see, the annual subscription received during the year is here, 3,36,000. I can write here the bank figure here, 3,36,000. And the difference we used to write as income and expenditure account to be written in the income and expenditure account. But having said this, there is subscription refund also of 1,600. So entry for this is subscription debit and bank credit, because we are returning to those members the amount of 1600. Subscription refund will come on the debit side. So we have to write here also that is going to be the refund to members 1600. And now the difference will be written with the income and expenditure account, and that will be shown as subscription income in income and expenditure account. So let's go for the total 4,000 plus 3,36,000 plus 5,600, sorry, plus 5,600 minus 4,800 minus 1,600 and minus 3,200. So the answer is 3,36,000 again. So we are getting the same answer, 3,36,000, because the total becomes 9,600 other than 3,36,000 on the credit side. And I think total will also become 9,600 on the debit side. Subscription will be written over here, 3,36,000. It becomes easier for us to handle it. Other income, if we see, if there is any other income in the question, no, it is not given. No other income is given regarding the question. So subscription, sorry, this is the point I missed. Subscription 2,400 owing at 31st December 2020 was irrecoverable, right? And the subscription of 1,600 prepaid at 31st December were fully refunded because some members did not renew their membership. So refunded वाली तो हमने लिख ली 1,600 bank to subscription, but 2,400 was irrecoverable. I didn't write, so I have to write it here. That is the bad debts subscription, which has become bad debts. That is 2,400. So this 2,400 will be subtracted from 3,36,000 to get the actual amount of subscription income. Rather, it will be, I think it will be added, right? 3,36,000 plus 2,400, 338,400. So I will write here 338,400 and plus 27,300 plus 27,300